Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Well, good day, everyone. I'm Rapstein, and here we are. And this is Friday, the 16th of March, 2012. And I got the dubious reward of saying, I don't think I've done anything right in terms of market recommendations this week. And that happens to traders, and I'm one of the guys. Didn't get stepped on big in terms of the recommendations, one wrong, but certainly didn't do a good job of anything. And every now and then it's good to come out here and say things like that. Anybody that thinks it's always a good time, get serious. It isn't always a good time. Now, I'm going to be leaving the March currencies, and we're going to go to the June shortly. But the important thing is, these are still tracking the cash very well. You're up 70 points in the euro. The pound rallied dramatically, has ended its downtrend, in my opinion. And the dollar index looks like a correction time is setting in. In the grain market, they're still moving dramatically to the upside. They keep going like this, and what happens is you put in a top into the springtime that is one that you have to deal with for quite a while, and that's what I'm assuming is going to happen. Gold and silver still on the weak side. The copper market got back to the 394 level, and if you've been watching what I've been saying here, I've still got it pegged at the 395 area is your top area right now, and it's pulled back into the 388 zone. In the silver market, what are you doing? You're narrowing in rather dramatically. You can almost see how beautifully this keeps narrowing in. Now, if the market breaks out from here to this 3150 area, be very careful. You could really leak to the downside. And you're going to say, why does he keep talking if it breaks down and not up? Because the market has got waves down, not waves up, and you can see them as clear as can be right here. Now, if you took out 32.90, and from where we're at, it's about 40 cents higher, and stayed up on the day on that, I think you could make an argument that maybe then we're starting the basing pattern area. But basing pattern does not mean an uptrend. As long as you're under this red line, the 18-day average of closes, there's nothing to be bullish about. The market has just come from 37.50 down to 31.62. So look at how fast it dropped, $8. That's not a little bitty drop. And nothing on this pattern that I can make out of it is bullish in any manner. The market is holding the 100-day moving average of closes. It's underneath, though, the 45 and the 18-day. And the only thing it's got going for it is the averages are lined up in an opposite manner to be very bearish. Normally you get the short-term average under the medium term under the longer term in a bear market. You don't have that. They're flip-flopped the other way. So it's the only thing I think that could actually act as a buffer, that if the market tries to rally, maybe it goes back to the 45-day at 33.40 and tries to see what it can do there. In terms of the Bollinger Band, things are still very bearish. The band is still dropping down. All you did is come down to it, move to the right, and if you take out today's lows again, you may just continue dropping back to it. And in terms of the stochastic studies, they're not even bouncing. They're laying down like they have weights on them. They're starting to embed, and that is also a bearish sign if they lock in and embed. So nothing I see bullish there. In the gold market, you're embedding the stochastic here too. So unless you take out 1667.40, which is $8 from here, the market's going to have a pattern of lower highs, and if it starts down again, gets under 1634.90, it confirms the lower lows. The fly in the ointment, take out 1667.40 and develop more of a trading pattern. The market that is bullish is the copper. The pattern remains one of higher highs, higher lows, prices staying over the 18-day average. So I think the pros are still going to buy this 18-day average at the 385.75 zone. As long as you don't get under this 382.50, I think they'll be comfortable, and they'll still look for the market to try to get back up to the top of its current trading range. And this is the trading range. You can see the Bollinger Band has just set this up. The way it comes out of here will probably be the next big move of the market. You're not even in overbought territory yet, so the bulls still have control of this market. In the gold-silver ratio, and this is a ratio of how many ounces of silver do you need to buy gold. Another way of saying it is the silver gaining on the gold market or gold gaining on silver. Nothing's happening. They're just drifting sideways. They're caught between 52 ounces and 48 ounces. There's nothing you can do there. In the bond market, wouldn't surprise me to see the market, be it today or Monday, get back up to this 18-day average and fight its battle there. You're at 136.19. The Bollinger Band's 136.21. You are 4 days under it. 5's typically the most you get. You're oversold. This, in my opinion, is not a place to be. The dollar index. Let me tell you the difficulty in these markets, and I'm just sharing something. When the downtrend ended, that's one thing over here, because you made, and I'll just show you this. Here you were in a downtrend. Lower highs, lower lows. You hit one of your objectives, you're oversold. It's a place not to be short now or take money off the table. If you take out this high, right here that I'm pointing at, which you did the next day, I'd look for the market to potentially get to the 18-day average of closes as it corrects now an oversold condition. It tries to get up there, fight its battle. If it continues, you're looking for the Bollinger Band. Here's the dilemma. If you came in, and this is March 2nd, we're already, 2 weeks from there, your risk is still back to 78.54, let's call it. You're buying the market anywhere you can in this 18-day average. You got $1,500 risk. It's too much. The market goes up, hits the Bollinger Band, and starts riding it. This has been the difficulty of these markets. There's been nowhere to come back in for the long side. It falls back to the 18-day average, and if you were to buy there and put a stop under the most recent low, you got $1,000 risk. It's hard to get involved, is my point. Market comes up, it's playing its game this week, comes up, hits the Bollinger top again, time to scoot, and if it heads down, I tell you, look for support here, but in order to get there, you got to take out 80-10. You're also developing, and this is on Wednesday, an embedded stochastic. You start falling yesterday. If the market's going to hold, it's got to be today, Friday. If it lets go of 80-10, the trend neutralizes, and you look to get back to the 18-day average. Guess what just happened? You've neutralized the trend, and now the thing is, I think you're going back to the 18-day average, and you got to wait for a new trend to develop. This has been hard. The stock indexes were one of the indexes that, no matter what I see, it's been hard to get long. Where do you buy them? Where do you put in your risk factor? You know, there are times when no matter what you do, you're hitting your head against the wall. This has been, for me at least in March, one of those difficult times. And I'm watching it also happen in the stocks today, setting back just a little bit. Nothing big to write about. Grain still going up. And grain markets, what you have to keep your eye on, you're going to have two different worlds in grain soon. You've got the old crop where that's still what people are buying and what China needs, but this new crop is going to be a big question what happens. And the higher you go now in cost, you may not realize it, but being in the grain business for 40 years or knowing quite a bit about it for the times that I've been in it, you start allocating acreage now. You look at the price of how wheat versus corn versus beans. You're looking at all the different acreage out there, what you can plant, where can you get double crops, and that's what farmers are doing. They're figuring out what they're about to do now, and it's going to get very, very interesting. Actually, when I say now, for some farmers it's late. They've already planted in parts of the South, and it's for the people that are in the Midwest here that they're probably still scratching their head unless they bought their seed already. In any case, you look...